Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for January the 23rd. Before I jump into the content, please do me a huge favor. Go ahead and hit the thumbs up button on the video. Don't forget to subscribe to the channel. Also, don't forget to click the bell icon to get notifications when I release these updates, because they come at different times each day. So I just shot the video and I went back and I was watching it and I thought, oh my goodness, what am I high or something? I was jumping all over the place. I'm going to try to do a better job of staying on point with this one. We're going to talk about the bear side, and then we're going to talk about the bull side. And if you guys hear my phone dinging, I apologize. I'm getting text messages today. I was in the ER again last night, so my family's worried about me. I'm fine, by the way. Just had more issues with my neck. So let's take a look first at the daily chart, and then we'll zoom in and take a look at some of the smaller levels. Unfortunately, I closed out a bunch of my charts in that last video, so I'll have to reopen them. But the first thing I noticed, guys, is if we take a look at the trend, right, the downtrend. So the first thing we'll do is we'll take a look at a non-log chart, okay? And we're going to take it from close to close. Let's see here. This close was 11,975. This close was 11,981, so it's technically a little higher. All right, so we went from close to close. This is the non-log version, all right? When we move over, this looks like a bullish retest. So if you're a bull, you want to see this level hold. If you're a bear, you want to see this level break, okay? So that's the first thing I'm going to point out. This is a very important level. It's even more important because if we put this in a log chart, this looks like a bearish retest where it came up and now it's falling off of it. So which one do you trust? Neither, okay? What I really want to see, and I should have been more clear about this last week. I was doing videos talking about the downtrend. We're still in the downtrend, yada, yada, yada. I really should have pointed out that these things were different. And, you know, I think my bear bias was probably getting the best of me a little bit there. But they are different, and we really want to see them agree with each other before we get too overly excited. So I want to see this break back underneath the non-log version so that it agrees with the log version. And then I have, like, you know, more of a confirmation. Right now they disagree with each other, okay? So yeah, we have to wait and see, essentially, is what I'm trying to say. That's the first thing I want to point out, okay? It's not time to get super, super cocky as a bear. It's also not time to get super cocky as a bull, which is a lot easier now. Bulls are getting a little bit nervous now that prices pulled back about $900, okay? I personally think this was the top, guys. I think this was a local top. I do think we're going much lower. If you take a look at the thread that I did over on TradingView a few days ago, I guess it was about a week ago, this was the thread I laid out. You can go read this for yourself, so I don't have to, you know, do 10-15 minutes of video on it. But I laid out all the reasons I thought this was a repeat of the summer of 2018. You know, we had similar MACDs, we had similar RSI on the 3-day, we had similar RSI on the weekly. We had this 21-day moving average that we had broke above in both cases. I'll zoom in so you can see this a little better. See, we broke above it here. You know, we had, in both cases, it was around 27 bars on the 3-day chart. 3-day RSI was similar. We had almost identical price action. This is 2018. This is current day. We had similar hidden bearish divergence on RSI. We had a similar retest of the 200-day moving average. Just on and on and on and on, right? Well, this thing is getting more and more confirmation that it's actually correct. If we take a look at a weekly chart, this is a weekly chart from right now. Current time. Look here. See this 21-day moving average? We had broke above it in July of 2018, come right back below it on the very next candle. Okay? Now look at today. Last week we broke above the 21-week moving average. What are we doing so far? We're coming right back underneath it. See how RSI came up to the top, or near the top of our RSI box, our bear market box? Here's 2018. It came up, didn't come up quite as high in 2018. Right, but it did stay inside the box just like we're doing so far here. So this still looks very, very bearish to me, and I'm pretty happy in my short position. I was short from, I thought it was 86.83. Today when I looked, it said 86.85. I'm still in that short. Okay, so I'm up about 4 or 5% on it, and then once you add in leverage, a little bit more than that. So so far so good. Okay, on the weekly chart. If we take a look at the 3-day chart, we've obviously chopped through this level of support, just cut through it like a hot knife through butter. So it's, you know, again, that's a bearish signal to me. It looks like we're going to probably continue pulling back down to at least the $7,600 to $7,700 area, which is down around this support Also, we have a CME gap down there. If we look at the 3-day RSI, this is starting to look more and more like a false breakout. Okay. That being said, we need to wait for confirmation because this is a January 22nd candle. It does not close for about 30 hours from now. This candle will close. Want to make sure this closes underneath this green line. It could absolutely pop back above it, and then in hindsight, when you looked back, it would look like it did something like this, like it never came below it. Okay, so we have to wait for confirmation. But so far, it ain't good if you're a bull. So far, this is looking a whole lot like this false breakout in July of 2018, right? Whole lot of people who are super duper cocky just last week, not so arrogant right now, starting to get a little bit nervous. Okay, time will tell. I'm not cocky either. I still think this thing has a whole lot of chance of being a bear trap, not a bull trap, but a bear trap. Right? We really want to see this thing come down. At least I want to see it come down back inside this red box. Okay, I don't think it's time to start going all in on 100x shorts. So we'll get rid of some charts there, clean up some of my screen so I can stay focused. This was the CME. We talked about this in yesterday's video, right? On the 1 hour, there's still a gap, but on the 4 hour, there isn't. On the 4 hour, this came up, and I was talking about this being a perfect short opportunity. Came up and basically filled in that gap perfectly before moving down. And that gap was at $8,685, which is literally exactly where my short is, $8,685. Okay. And since then, price has moved down about 6.32%. I was thinking of 4%, but okay, it's more than that. I'm not going to complain. I'm happy with that. Okay, so that is the CME chart. This is a stock I was looking at for a friend. Let's take a look at. I wish I had closed on my charts, but okay. In yesterday's video, I talked about these lines down here. These are the RSI lines. I said I was watching this line for support. It started back in November, ping, 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 right, support. I said if it cut through that, I thought we'd lose our price support around 8,500 and go much lower. It's exactly what happened. It cut through it and just chopped on down. We're starting to reach into the oversold territory in the 4-hour RSI, but doesn't mean a whole lot because there's no divergence, okay? There are no bullish divergences, and there won't be for a long time because our low back here was way down around 6,900 bucks. So by the time price moves down there, RSI is going to be lower than this, and we're going to be waiting a while for any type of bullish divergence on that sucker. Okay, so that's what I'm saying on the 4-hour chart. On the daily chart, it looks like I closed the one I was using, so I'll just redraw it real quick. I have been watching this line of support from back in September. We had support. Basically, it was resistance to this area here, and then, hang on, it was more like this. Had it something like that. Essentially, I thought it was acting as support through here. I thought it acted as support here, and then once it closed underneath it, to me, that was a signal to go short if I wasn't already short. The daily closed at 86.60. I was already short, so I didn't add to my short. I just waited, and of course, we're dumping, so I like seeing that as well. So RSI, again, trend lines in RSI is amazing tool. Okay, so that's the weekly, that's the 3-day, that's the daily, and that's the 4-hour. That's what I'm seeing as far as what next. Okay, a couple things. So if this is indeed a smaller downtrend, which I think it is, then we've got our top, we've got our low down here, we've got our pullback, and this trend target's down around $8,093. Oh, I won't log off. $8,061. Okay. Again, that doesn't mean a whole lot on the big picture. Like the weekly picture, 8,061 doesn't mean squat. But that's what I'm looking for. At that level, if we can get to that level, I'll try to reevaluate and say, okay, is this a pullback and a bigger uptrend, or is this the start of a correction? If it's just a pullback, I want to get out of my shorts, right? But if it looks like it's the beginning of a bigger correction or even a lower low, then of course I'm going to stay in those shorts. So I'm going to watch that with a keen eye. Remember that on the daily chart, we have this really strong level of resistance, which is now flipped to support at 74.30. We just kept having a really hard time getting through it all through here, and we finally broke above it. We took off. And if we draw our Fibonacci levels, this is the the bullish scenario, guys. If we draw fibs from the low down around 6,400 up to the high here, look here. Look where that red line is at. It's right in the middle of the golden pocket. You seeing it? Dead smack in the middle between 61.8 and the 65 Fibonacci levels. So if you're a bear and you're counting your chickens before they hatch, you might be very, very sad, because it's entirely possible this will come back down to this level and will bounce right off of it, and you'll find out that this was the bottom and this is the higher low. Okay? Don't get overconfident if you're a bear. Me personally, I am a bear. I do think this was a false bottom. I do think it's going to go lower, but I'm not going to get stupid about it, right? If I start to see bullish scenario, especially if it comes down here and starts putting in some type of W or double bottom structure, I'm going to long Bitcoin, okay? So that's what I'm watching right there. Still bearish, but just like when I drew the Fibonacci levels from, you know, the other side of the coin, right? So here's smack dab in the middle of the golden zone. Well, it's the same reason that I thought it would come up to around $9,100, because when I drew it from here to here, this old level of support was smack dab in the middle of this zone. And what happened? It came up right to it and bounced off of it. Okay, so now it's just the other side of the coin. So keep that in mind. And again, on a non-log chart, we're still sitting on top of this. So a whole lot of questions remain to be answered. All right, let's take a look at the total market cap. I'm going to pull up a new chart for this real quick. We'll just use, you know what, before we do that, let's look at this old school chart. I haven't looked at this in a couple of weeks, maybe a month. So this is the line chart that I did quite a while back. And, you know, we're outside of the parallel channel on it. It's non-log format. Inside the channel on the log, so no surprise there. We had the double top in RSI. You know what we also have, and I just now noticed it? This is a head and shoulders, guys. Look at that. Left shoulder, head, right shoulder. It's a tiny little head and shoulders, so the price target, it's not going to be much. It's probably already hit the price target. Looks like around 86 to 89, $300 price target. Yeah, it's already hit the price target, so I don't care about that. And the volume does confirm it. High volume left shoulder, lower buy volume on the head, and then sell volume on the right shoulder, so that looks good. What I'm more interested in, this is a reversal signal, right? It tends to signal the end of the trend. So if this was an uptrend, this is saying the uptrend is over. So that's very interesting. I'll have to keep an eye on that. All right, let's take a look at total market cap. We'll load a new chart up. We'll just make it this nice clean chart here. And we'll do total. And we'll go total market cap. All right, this is monthly, and you can see we're starting to get a big wick on the monthly, which is what's happened on every single one of these candles. This downtrend has went up, people got excited, and then it started to dump. I believe this week is the Chinese New Year, which historically, going back to 2014, has always led to a red January, so keep that in mind. Let's take a look at a 3-day chart on the total market cap. Let's make it log format because we're looking at a longer time frame. And let's draw our trend extensions. I haven't looked at these in a few days. I don't remember where they're at. So down, up. Okay, so it looks like we got a pretty sound rejection at the $243 billion level, but we haven't broke back below $220 billion. So I'll watch that, right? If we break below that, it would be bearish in my mind. It would mean that we could be going down to the 193 again. Cool. Let's look at the total too. See what alts are doing. Altcoins. Down, up. Altcoins have lost their 1.272 level. Looks like they could be heading down to the 1.618. Interesting. So alts are taking a pretty big beating. Are they bleeding out worse than Bitcoin? We'll take a look at that in just a second. One thing I noticed about alts, this is so weird. I don't know if it's a coincidence or what, but they seem to be respecting this 200 moving average on the 3-day chart. Kind of a weird average to use, but back here it was acting as resistance, right here it acted as resistance, and right here it acted as resistance. I don't know that it matters. You know, we don't have enough historical data to really say it matters, but it is something that I might kind of keep, you know, one eye on in the future, just because it seems to, you know, be relevant these last year and a half or so. On the daily, look at this. Came back down. We've got a retest of our 200-day moving average going on. If the alts lose this, that's really, really bad. We do not want to see the total market cap for alts pull back underneath the 200-day moving average, which is right around 72 billion. If so, this could have been one giant bull trap. Okay, so that's the level that I would watch on the altcoin. Looking at these alts, I'm not going to go into detail on the alts today, but so far so good, right? Ethereum is bleeding out. EOS is bleeding out, which I took profits on EOS, so I'm happy about that. Took profits on my Stellar, so I'm very happy about that. Took up 6.29 cents. So I don't know how far it's down from there, but okay, almost 9% if I close it now, so that'd be kind of nice. Zcash is trying to come back down to its 200-day moving average, right? Get rid of that. EOS is coming down to its 200-day moving average. Stellar, I don't think Stellar even hit its 200-day. Yeah, it just pinged it, acted as resistance, and Ethereum couldn't break through it. So bearish on the few alts that I'm looking at there. I mean, I guess the main thing I want to point out, guys, it's hard to be super bearish right now on the smaller time frame, like today's time frame, because it's just it's so oversold. You know what I mean? Like if you look at the hourly, look at this. Just put in bullish divergence on the hourly, right? It's not confirmed yet, but right here it was 19.86. Right here it was 20.91. You know, the RSI was moving up, price was moving down. A lot of times you're going to get at least a 2 to 3% pump minimum off of an hourly divergence like that. So, you know, you're looking at a price moving back up to 80, maybe it moves back up to test $8,500, right? So I don't want to get super bearish here on the smaller time frame. If you look at the 4-hour chart, it's coming down. It's almost into the oversold territory. Not quite yet. That would be the level that I'm watching right there, 85.11. And again, on the hourly, it might be that it just comes up for a dead cat bounce, hits that, and then further downside. If it breaks back through that, that wouldn't be good for bears, right? We don't want to see it break back above $8,500. On the 6-hour chart, we're not quite oversold, but pretty close to it. Let's see if we got any kind of levels on RSI here. Go back here. That doesn't matter. That one matters. Okay. So you got a touch here, you got a touch here. Didn't quite get there here, which, by the way, was that right shoulder. Looks like, let's zoom in and make sure we got these lines drawn up properly. We want to try to get them to touch. So we want to touch that point. We want to touch that point. Okay, now where does it go? Looks like, see that? Looks like it broke underneath it, and looks like it's coming back up for a bearish retest. So again, we don't want to see it break above it as a bear. We want to see it bounce off of it and see more downside, okay, on the 6-hour chart. On the 12-hour, don't care about that. It's too low. And this one, I don't really care about this one either. It's too steep, okay? I don't like the angle being that steep. So yeah, not seeing anything that I care about on the 12-hour. The 12 weekly EMA, which I don't trade the EMAs, but once in a while I'll take a look at them, see where they're at. It did act as support quite a bit, you know, so might be worth keeping an eye on that. It's down around $8,082, and I think that's pretty close to the 21-week moving average as well. Yeah, the 21-week moving average is 8,373, so it's quite a bit higher. But my friend David trades the 19. He thinks the 19 is actually the line to watch, not the 21. I tend to agree with him. The 19 has a lot of touches. You can check its historical accuracy. And the 19-week moving average is actually down to 8,165. So I really want to see that break underneath the 19-week moving average so that I can confirm my bear bias. Okay? All right, so we're a little over 20 minutes in. It's a little shorter than normal, but guys, there's just not that much to really talk about. It's the same stuff that I've been talking about for weeks now, and you know, really, it's just a matter at this point. It looks like our bearish or my bearish bias is being confirmed, but it's not a sure thing yet. Need to wait, make sure it cuts through a couple more of these support levels, and we really need to make sure that, you know, it's not just a pullback and a brand new uptrend. Okay, so you have all the information that I have. You have the levels that I'm watching, and take that information and do what you will with it. Okay. Please remember that I am literally some guy sitting in a spare bedroom, so nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence before making any type of investment in cryptocurrency. If you guys enjoyed the video, please be sure and give it a thumbs up. Don't forget to subscribe to the channel, and don't forget to check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and also where you can join my paid trading course if you'd like to learn how to trade. This is James with Crypto Common Sense. Please trade safe.